The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach do we go, dear friends. Of course, the FOMC meeting came out. We're up 10 points on the S&P cash, kind of nudging up to the high of the day at 2151. And change volume is tepid at under 2 billion shares on the New York Consolidated Tape. So we got what we wanted. They've come out with their news. We're kind of still trapped in this narrow trading range. Yesterday, I said I'd play this clip. And we will play it here in just a minute. But probably one of the most intelligent things that anybody has said on CNBC in the last year. We'll replay that from Mr. L. Arian. But I think we're kind of in what he was talking about over a year ago. As always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have? We got a few stocks that have moved up. A little bit of earnings news out there. Adobe, Alibaba, Baidu, Federal Express, KB Homes, the winners. On the losing side, we've got CarMax with earnings out this morning. Some news that I haven't had a chance to check out on Netflix. It's off about 4%. But for the most part, we're kind of stuck. What is that old Steelers Wheel song? Maybe the engineer can find that for the bump coming back in. Stuck in the middle with you, which is exactly what I think we've got going on here. We are stuck. As I said last Friday, Monday and Tuesday, we're kind of around this 2140 to 2150 area. We don't get much higher than 2150 when the volume falls out. We don't get much below 2140 on the S&P cash without the volume falling out. And part of that, I think, goes back to this comment on L. Arian that has found the duality, oh, don't you like that word, duality of the Fed.
So what we need is for markets to consolidate in the middle. Instead, markets go one way or the other. So when we have really good days, it makes Fed officials nervous. Right.
Because really good days in the markets, you mean?
Really good days in the markets because it takes prices beyond what's justified by fundamentals. They worry about excessive risk-taking.
Well,
they worry about
down
financial
days either.
And they don't like down days either, right? So what we need is a period of consolidation. The trouble is that the markets won't stay in the middle. The markets will either be discouraged by very low rates and go into high risk-taking, or will switch the other way around.
And doesn't that sound kind of like what we've been in for the last year? The Fed doesn't have a lot of ammo left. It's left it to the Treasury to come out and kind of whack a mole with the dollar. And if we're headed down, the dollar moves down. If we're headed up, the dollar moves up. The control rods for the nuclear reactor that is this market, if things started to head south, certainly looks like the dollar. But the hands of the man behind the curtain, we cannot ignore. Sorry about that for all those people on the yellow brick road. But we shall continue on. 2149, we'll see if anything actually happens out here. But this seems so far as one of the lighter movements in the stock market on the heels of it. And, of course, we've got a little bit of problem out here in that this is not over. In another 20 minutes... It is. It's going to be Janet Yellen blabbing and yakking and talking. So I don't think we're out of the woods yet on any kind of direction. Normally she runs anywhere from 3 o'clock to 3:30. I'm figuring on the average about 3:15. I think we've hit the high of the day right now, 2120. Yeah, 2152. on the S&P cash, but there is still very light volume. So I'm not going to be buying into a great deal of this, but we shall see what happens. In the meantime, it's time to get this show started.
Then it's all just a little bit of history repeating.
It is history repeating, and on this day, guess what happened? Forecasters predict a few clouds or scattered thunder showers. The hurricane of 1938 crashes across Long Island and coastal Connecticut with 186-mile-an-hour winds. That's fast if you're in Lutz, Florida. Killing some 600 people, flattening 275 million trees, and doing $306 million in damage. The stock market is blown over, too. While the Dow closes up 1 point for the day at 139.29, the market loses 7% of its value over the next 4 trading days. The question is, what are we seeing here today? A little bit of ignoring of a hurricane or no hurricane at all already on this day. As we said, we had a few earnings. We'll look at the charts as we keep an eye out on the market at 21.53 now. Bed Bath & Beyond after the bell, that Miller-Herman thing we talked about yesterday, Jabil Circuits, Red Hat, probably the ones that are going to be the 3 that give us some kind of clue as to what's going on. I haven't had a chance to look in that Miller-Herman steel case thing, why those things kind of got trashed the last couple of days, but they did. Jabil Circuit, probably going to tell us a little bit about specialized electronics put together here in the United States. Red Hat, tell us a little bit about that cloud space business. And Bed Bath & Beyond, tell us a little bit about retail after the bell tonight. So hang on for the Tom O'Brien show in the 4 o'clock hour. I'm sure he'll be calling those out. Before the bell tomorrow morning, we've got AutoZone, so we'll see a little bit more about that. And other than that, it's time to get into some charts and the market, which is already in progress. So what do we have going on? Wanted to look at a few of these out here. Adobe earnings after the bell last night. It is up 6.5%. Nice gap. Certainly, if you look at the last year, we have gapped above previous levels. And as far as I can tell, let's take a quick look here. What are we doing for volume? So far, you needed 3.4 million shares. You got 6.4, so you got a valid breakout on Adobe today. If it holds up here, what you would like is this to pull back to about $100 on light volume to get a chance to take a ride on the big Adobe. Other stocks of movement, a lot of cash being thrown around in China, and we see Alibaba bounce up on that. I still suspect that this thing is coming back to about $90. That's where this thing gapped up on the 12th of August. 72 million shares on that date, so we're looking for this to pull back in. On lighter volume to buy. The question is, what is real and what is imaginary? Now I'm going to have to play the Knights in White Satin thing, too. What is real? And what is it? How does that go? What is real and what is a dream? I don't know. I just remember that Knights in White Satin thing where he starts talking. That was kind of a real 1969, 70, 71, 72 thing, wasn't it? Talking in the music. Yeah. We'll be back. 21.51 on the S&P cash.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Steeler wheel. Steelers wheel. I think that guy was kind of a big deal. Can't remember. Stuck in the middle. Anyway, we were stuck in the middle. We're coming out of the middle into the nougaty center of our trading. You hear what I did with that? I'm pretty proud of myself. 2140. Once we get above 2150, not a lot of juice. Once we get below 2140, not a lot of juice. And I'm wondering if there aren't a couple of men behind the curtain, Mr. Jack Lew, messing with my trading profits. And I think that there is. Besides kind of a creepy old man behind the curtain. Maybe they're out there. Maybe they're not. Maybe it's just a good conspiracy theory. Now I got to find a way to cash in on it. 2.14 billion shares. So volume, not all that exciting. As we played the clip at the very beginning, Fed would like this market just to go and die somewhere, but not move, and certainly hold it up through the elections, I suspect. But we shall soldier on. We were looking at Alibaba when we left. A nice move out here. No volume on this one today, though. Certainly pushing back up here to the recent highs. But I don't see a lot of juice. You wanted to see something like 33 million shares, 16 million shares so far today. Another one in the China stocks, Baidu. We have out here coming up to the gap down. This gap down happened with 10.2 million shares. Got into it with 8.1 million shares back here. Oh, actually 4.2 million shares on the 7th. And the day before you did 8.1, but didn't quite hit that gap quite yet. Pulled back a little bit. Now we're back into it with 4.2 million shares. And again, that gap down back on the 2nd of May was 10.2 million shares. So we'll keep an eye on that as the FOMC meeting after party starts. And of course, what do we got? Another 10 minutes to go before Janet Yellen starts yakking again. We will certainly take a look at that. FDX guiding up. Mostly on thinking that a lot of people at Amazon are going to be using their services this fall. Nice volume, good sign of strength. 3.7 million shares already against the 1.3 and 1 million shares of previous highs. If we go back a little further, November 20th, this has been kind of a good segment of resistance for this stock. And I don't know if they made a deal with Amazon or what. I did read a little bit of the text of the conference call, but it sounds like these guys did well. And the Amazon actually growing way too fast to replace FedEx with its own drivers. They just want a kind of a core bedrock of that, the starter position. And when it's time to press the coals, FedEx, UPS going to come in from the wings, I guess, to provide us with all our Amazon Prime needs and goods. But certainly a nice day out here. Let's go back a little bit farther out here with FedEx and see. You know, you've got a big gap. As we've said, so many of these stocks are coming back to these gap downs that started the whole kind of washout to the downside. This one we go back to almost a year into June 17th of 2015. Gap down with about 4 million shares. You really don't have a great deal to hit in that. But you know, you've got what you probably don't like, which is some volume down back at the 120 lows from January 20th. You could make a case that that actually tested the August 24th low of 2015 of that horrible day and set a low. But don't know if we're running out of juice here. That well, it looks like this thing is going to meander up to about 180 bucks. If you get real light volume there, that may be telling us something both about FedEx, UPS, and Amazon as we soldier on. KBH Homes, we've been talking about the home builders, and it's up about 1%. Nothing on this one, kind of like Mr. Market out here, stuck in the doldrums that we talked about so much in July and August, where this market tries to go higher, tries to go lower, and then gives up and decides to lay out there and go sideways. Okay. What do we have? Just a doji out here. So why it's up a little, nothing to really take a look at. Let's take a look at the last one, which is Netflix of the movers of the day, as we close in on 2.2 billion shares. See if anything else is happening. And West Texas up 3%. Maybe we'll go back and look and see how some of those stocks we've been talking about the last couple of days in the energy sector that look maybe like they were trying to at least get a temporary bottom we're doing. Netflix, you know, this thing gapped up on no volume, really, back on the 26th of July. And we're kind of coming back into it, but there wasn't a lot of juice back in there. It just kind of, I think they just kind of ran the shorts a great deal. Volume picking up at least more than the last 2-3 weeks. Let's call them 2 weeks. Back into the candle of the 5th of July. 5th of August. 17 million shares of that day. Today we got about 15 million shares. So I suspect that Netflix has and is winding up to come back into this $89 gap. That gap takes you back to the 26th of July. So I think kind of wraps up the beginning stocks that have been moving a little bit. We talked last week, and I was at a coin flip to short Wynn Resorts at 109 last week. It was kind of tough. The volume actually kind of scared me out of it, but the intraday movement in this stock really kind of made this thing look rather sad. The downside is since we've made this high at 109.50 on the 15th, volume is kind of decreasing over the last couple of days. We are back into the volume day and the sign of strength on the 12th of September. That had 7 million shares, and of course, we just have 2.4 million shares. It certainly looked to me like they just run a lot of shorts out for expiration week, and it was pulling back. Again, this did take off with okay volume, but didn't really have the kind of sign of strength that you would like back on the 1st of September. Everybody just yelled and screamed and said, you know what? This is the first month that gambling, overall gambling revenues did not go down. Therefore, the market has to go up. And I don't know if you can draw that kind of parallel, that kind of linear regression into it. It seemed to me like a lot of people were dying to get into this stock, and they did. Now we'll find out whether they die owning it, but you never know. I just didn't see that much flip back in China, but everybody's certainly coming back into that level. The 12th is the day you're looking at there. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com. And of course, you can post something in the den and I will take a look at it. Ooh, we've got Sam. Oh, that would be a horrible thing if Sam actually went down. We'll take a look at that one when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, we had some smart people out here shorting Boston beer on the spike of July 22nd. I think that was during earnings. Earnings were pretty good. That was at 195.35. Someone in the den that has a name that reminds me of beer from The Simpsons. You spiked into it. You came back in, tested it with a lighter volume back on the 20th. of August, and this thing has kind of just moved all the way back down. As you may know, we talk about it occasionally out here. I do have the short volume for the equities, so I kind of have an idea about what's going on. If you're wondering about looking at this, let me see. Let's zoom on in so we get just a little bit bigger picture out here. It kind of looks like a matchstick, the black part being the wood and the red part being the part that when you strike actually starts catching fire. A little bit of volume in that with the short volume, but you can see a lot of people decided that it was time to pull the trigger and go short. I'm wondering if they didn't run a lot of shorts, and then maybe the smart money pulled the trigger on this. Probably feeling pretty good if they shorted the top or most of those days. But that seemed to be it. That and the next day, a lot of people getting short the stock. We are now kind of seeing a little bit of throwing a little gasoline on the fire on the right-hand side. As we get into the 13th, we saw yet another big day of shorting this stock, probably on that long candle down. And, of course, the next day continued on and has. We come back and look at it. There's a light volume low. It wouldn't take a lot to break through on the May 18th low. And more interesting to me are these big gaps. And maybe you can see it here. It's kind of tough. There is 1, 2, 3 gaps around this day. 1, 2, 3 gaps. So you got a gap up. You got 2 gaps down in this range. And that goes back to 2012. That's December 13th is the first gap up. And then if you go back even further, you've got a couple more gaps in this 115 to 128 range. So this is a little gappy guy back here. Let's see if we go back even a little further, if I can still pick up these gaps. They're kind of small. They may evaporate. Come on. Do I have it? Let's go back here 4 years and see if I can get it. Oh, there we go. Accidentally erased it. Do I have it? Or is that as far as that goes back? Is there any more? 6 years? Is that it? Okay, there we go, finally. Okay. We've got gaps at under $100, but this one that I was looking at starts way back here on, what is that? Looks like July 9th of 2012. This thing gaps down with 330 million shares. You get a little gap again out here on the 7th of November 2012, and that price range, and then the gap up on the 13th of December 2012. Gap range has been open for a while, but it looks to me like you've got enough energy, probably, and close enough to it, that you're going to come back to that 102, that's 120 area, not 102, 120 area where all those gaps are. Checking back in with the market, Miss Fed is yakking. And not a lot happening. We're up about 6.5 points on the S&P cash volume, coming in at 2.3 billion shares. So again, probably going to be fairly mild until she's done. I'm figuring 315, 330 if history is as a guide. Maybe she'll be done. Seeing a lot of one-liners kind of come across, but I don't see anything that truly would move the market, and don't see either movement in the index or the volume that would suggest anything big is about ready to happen. We'll look at a few other stocks. Oh, we were talking about that yesterday. Let's go back and look at a couple of those from yesterday. We were talking about OIH and the OII. A couple of these stocks were kind of making some views that looked like maybe something was happening. I don't know. It wasn't big enough for me to buy, but I did like these things bouncing off the gaps. What else do we have? Anyway, this gap up that OIH has been bouncing off of back to, what is that, April 8th with 1.7 million shares. First time hit it with 6.4 million shares. Got into that candle again with 7.6 million shares, assuming with a higher volume that you're going to come back here, retest that low one more time. And we did yesterday. That is what we were pointing out. And you got a little bit of a bounce out here. Energy still probably a little bit too much that August 18th high. But kind of interesting to see crude up, what, about 3% today. So I'll continue to look at it. We'll see if there's any kind of sympathy in some of these oil drillers out here. And the answer for Tidewater is no. Although I did see a ad for a new movie coming out for a deep water horizon. That's going to do BP a lot of good, I suspect. Down again, volume has not picked up more than yesterday. But still kind of some bad news on that. What else did we have out here? I think that's it in the, was it Carbo Ceramics, CRR? Yeah. This one too. Unfortunately, the volume did come in yesterday. So you had higher volume than the May 16th, May 13th low. This was one of these super pump and dumps from Jim Cramer out there. And go back and just look at this one. Talk about getting up to the sun and having the wax on your wings melt and you falling all the way back down. A little Greek history there. That's not history, is it? What do they call that? Yeah. Greek Nis? Yeah, Nis, I guess, would be the best way. This thing, not that long ago, was 156 on July 1st. And, of course, if you're unfamiliar with this company, very tough to figure out their road forward. They made a ceramic sand that would work for fracking. But someone came along, and what did they figure out? One, there was a lot of extra gas, and prices were falling. But two, that if you polished existing sand instead of you making this very expensive ceramic bead to go in there, you could just dump kind of sand down there after it had been polished a little bit. And that kind of put a big hitch in the get along. I don't know if you can ever bypass something that your technology has been superseded by something as cheap as sand that's been slightly processed. And I'm not exactly sure what it is, whether it's a special sand or special technique. All I know is it replaced it. And you don't need the very expensive carbo-ceramic thingies except for very special fracking places. But kind of starting to make it look like maybe there's some kind of low out here, but heavier volume yesterday. Little bounce today. We'll be back after the break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And I've got an email about the XLF. We'll try to get to that in the last segment, but it's just hanging on out here. I don't see a great deal going on out here other than all the goofed up ticks from Monday where the Guggenheim guys and some other people screwed up everything with some bad numbers, and now everything's messed up. And we'll talk more about that later, maybe tomorrow, if I can figure out what's going on with it. But it's all trashed everywhere you look. Or it's wrong. Somebody tried to make it look right. But it's one of those things with an ETF. They can mess it up if they try. We'll talk about some other ones. Anyway, that was kind of the wrap-up. I wanted to look at a few. We looked at the crude stocks. And so far, again, looked like a little bounce was coming. But we'll see how some of the stocks are doing. MasterCard out here, light volume so far, but it looks like it's going to match that 6.2 million shares that we had on April 28th by the end of the day. They're kind of interesting. So we will continue on with that. April 28th, 6.2 million shares. Got into it with 4.6 million shares on the 8th of September. Yesterday we had 3.8 million. Today, 1.7 million. You kind of don't like that. Energy on the way down is about the same as the energy on the way up. Again, go back to this gap of the 28th. It just looks like all these stocks, the market, everything else, just continues to kind of bounce around in these areas. Light volume continues out here. I'm going to say think about, maybe this thing pushes a little harder, then comes back down to this gap. I think this gap's going to get tested, though. You've got, again, all these double gaps out here seem to be getting retested over time over the last 3 months. On MasterCard, this is the gap down of June 24th on 8.3, let's call it 8.4 million shares. Then you kind of get back into it again on the 28th of July, and this thing gaps up on 5.2 million shares, so a little bit lighter volume in this gap up over the existing gap. And then, of course, up here to the highs and a little volume out here. So I would say that you got kind of a trading range. Maybe this thing gets up to 103 or something, and then it pulls back to this 94. I'm going to look a lot more at it. But again, probably going to know a little bit more when we come into tomorrow and see what real volume is absent a yakking Fed. Visa, don't have the same kind of problems with MasterCard. That is the double gaps that seem to get retested. But you've got two nice gaps down here, one at 69, one at 71. I don't know if these have to be tested. The volume was decent back there, 8.7 million shares on the first one off of the floor on the 12th of February, 8.7 million shares. The next one, not that big, 9.2 million shares. So kind of in line. It doesn't look like a big sore thumb sticking out here, but does look like maybe, you got 11 million shares. You weren't able to hold up the September 8th high with some decent volume through these previous November 19th and April 19th highs. You got kind of a trend line that's been going higher out here. You've never really had the volume that you wanted to see in the breakouts since that July 24th, 2015 high that had 21 million shares. You've been in this 8 million share range. You did get 11 million shares, so a little bit more. But these things kind of look like they could break. Wouldn't take a whole lot. I'm wondering if everybody's been just buying these up in the hope that higher interest rates are coming, and even after the election, we get nothing, and these things would, maybe it's all priced in. I think everybody thinks that they all know that it's priced in. Wanted to take a look at NVIDIA. We were talking about these stocks that were blowing through highs. Came down a little bit yesterday, back up today. No volume far, but we're going to be watching NVIDIA very closely out here to see if it like Win, maybe giving us a little bit of a push. Tidewater, did we talk about this already? Yeah, we did. Pretty much headed down. The OIH, the service. Let's check in and see how this roofing company is done. We were talking about this the last couple of days. Beacon Roofing coming back in. Let's come into a little shorter time frame out here. Back into this low. I was thinking that this thing probably should bounce off this May 17th low, $40.59, 4.1 million shares. Went into it yesterday with 585,000 shares. I got to sneeze, so hang on a minute. Man, I'm glad I keep a towel around here. That's all I got to say. 2150 on the S&P cash. So now we're kind of moving back up to the highs, 2.4 billion shares. As we were talking, Beacon Roofing back into this previous low with 4.1 million shares. But we certainly have lighter volume. That's what I was thinking. Maybe there's something going on in housing out here. Just a little lighter volume off this August 23rd high. And that would kind of make you think that at least some people are thinking that the housing market is maybe a little underpriced here. But I don't know. What do we, KBH didn't do much. Let's take a look. KBH didn't do much today with its doji. I don't know if you can make anything more out of it. Let's take a look at a couple others on my list out here. Rockwell Collins. We had this in the newsletter the last couple of days. Again, another one out here that looked like it was in for a little bounce. I didn't see that much in it, but it did look like a bounce was coming with a very light test of the June 27th low. $81.04, 1.7 million shares, and tested on the 19th with just 760,000 shares. So you get 50% volume in this, and you're probably going to get a little bit of a bounce out here. Of course, this is going to probably be a light day, so you kind of want to keep an eye on that. There's a couple others out here. Did we get to it? MPC, Marathon Petroleum. We're talking about this one peeking its head out. Lighter volume, not that much lighter. April 28th had 7.9 million shares at $43.26. We pierced that 2 days ago on 1.3 million shares lighter. Pulled back down 5.5 million shares. And today with crude moving higher, not much of a move in Marathon Petroleum. Is there anything else out here? TMST. Timken Steel wanted to see if this thing had done anything. You did have a test on lighter volume, or excuse me, on heavier volume, but still getting a bounce out of Timken Steel today, but no volume out here. Little lighter volume off this July 27th high. Looks like a soft landing for some of these, even with a little heavier volume as we've come back in the last couple of days. We'll look at a few more of these.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And taking a little look ahead, we've got AutoZone in the morning. It did test its high on about half the volume if you want to look at the March 24th high to the July 11th high. So volume was light as we came into those previous highs. We did bust the previous low, did so on just a tiny bit more volume. We've got a little bit of a bounce out of that and back into the trading range. Energy wasn't exciting off this July 11th high, but it wasn't. It didn't really squeeze down. So probably going to get a little bit better view about what these auto parts stores are doing, and also the auto companies themselves. But you've already busted this volume, not much, but that 8101 would be the problem out here, and that is if they would whiff, I think you could see this thing move fairly quickly to that February 8th low. Not saying it's going there. I'm just saying that if you were long, I would not be long without puts on the other side to back this up, because if they do whiff, looks like 681 would be a logical place for this thing to race on down to. What else do we have after the bell tonight? Bed Bath and Below. Take a quick look at this and see how this one. Man, this thing, we talked about it yesterday, just looks like it could blow out the bottom. If you didn't have that June 23rd low with 14 million shares, that might be the low in this stock for a while. You certainly would want that retested 41.15. Kind of interesting to see everybody get short that day, but it's gone up and kind of gone sideways for a month or so. I think far too many shorts in that stock. What else do we have out here in the last couple of minutes? 2150, 2.47 billion shares. I don't know if there's anything you can say now about that. Just waiting for Janet Yellen to get done so the bulls can decide that it's once again time to stampede this market higher. And then, of course, the bears decide that it's time to short the market. We'll find out in this. I don't have a dog in this hunt, as we've said the last couple of days. Certainly looks to me as a market you could stand by the side and wait for a signal rather than trying to anticipate one in what's going on. Oh, we were going to talk about Red Hat. RHT. This was another one. We did talk about it, I think, on Monday. And if there was one that looked like it was setting up in an ABC down, it certainly looks like it could be Red Hat. When we look at an expansion on this, on just an ABC, possible ABC down, what is that? 81, there we go. An ABC would take you to 65.19. And again, the more that you go to cloud spaces, probably the less that you need Red Hat. And of course, the less that everybody needs Red Hat means that probably the companies that use Linux servers and Linux software need Red Hat more. So the base is probably shrinking for what Red Hat sells, which is its Linux and Linux server help and Linux help. But, you know, talk about light volume coming back into a sign of weakness. That sign of weakness was on the 23rd of June. Came down with 6 million shares. We're in that today with about 1.4 million shares. And that one would be very dangerous. If I was going to pick one, and I'm not, that would be the one to be short on earnings tonight. I may try to see if I can't finagle a trade in there after hours, though. This does look one of the better ones, but probably going to be a very fast move. Trade's probably going to be over in 5 minutes. In the meantime, sell when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.